three session will be totally dedicated to the beginners, or even the first four session you can call it. Okay, because we are teaching even about the foundation levels, even the basics of stock market that is included in the course. That's why I will be teaching for the first 3 days most probably about the total basics of stock market, and after that, setup one, our false breakout setup two, options, and few analysis that you can make in options. And after that, doubt clearing sessions. So this way our roadmap goes. Not talking about the other thing, we will meet on Monday, Wednesday, and Friday at 6:30 p.m. and on Tuesdays and Thursdays we will meet at 5 p.m. or 4:30 p.m. I'll tell you about the thing. Okay. So this is how the roadmap will be going. Anyone who wants to speak out anything or want to share anything. Otherwise, I'll stick to the agenda. Okay, then fine. I will stick with the agenda. So one more thing, guys. You need to do one thing is don't unmute yourself in the middle of the recording. Once the recording is on, I don't want you all to unmute yourself. The reason is that yeah, you are the ones who are gonna get the recordings of each and every session that is happening. So it will fine. I mean, it will sound a bit too much lengthy and boring for you all if you hear this kind of unmuting problems. Okay, so better not to unmute yourself when the recording is on. Fine. Okay, I will start the session right now, and I will start the recording right here. Anyone who wants to speak out anything? Okay, fine. Don't unmute yourself in the midst of the session. And the recording is on. So the recording is on. Hello, guys. This is Gaurav, your analyst, your advisor, and your mentor at Finance Visory. Today is your first session, and today we're gonna discuss about the most basic terms of stock market that every beginner should know. This is a beginner session, so I'll be teaching through a PPT, and here we go. So, hello, ladies and gentlemen, welcome to our family, the Finance Visory family. So, what is stock market? Now, there are many definitions. People give so many definitions about stock market. Stock market is this. Stock market is blah, 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 aggregation of buyers and sellers of stocks, also called shares, which represent ownership claims on a business plan, blah, whatever. In simple layman terms, stock market is a tug of war. What is a tug of war? I hope you know about this game. Two people stand on different sides and pull the rope. So this is what is happening. This is a tug of war between sellers and buyers. If sellers overpower the buyers, then sellers win. The market will fall, and if buyers overpower the sellers, the market will rise. And that's it. The basic concept that I will give you about stock market. Invest in the stock market is most often done via stock brokerages and electronic trading platform. Investment is usually made with an investment strategy in mind. That strategy is what I'm going to tell you about. Not actually investment strategy, but intraday strategy. Next up, some common myths about stock market. So people say that stock market is gambling. So you need to ask to those people, have you ever done gambling in your life? And if he says yes, then ask him how. He will just take some money and put some money on whatever thing is betting on with a probability of 50 50 50% without even analyzing anything without thinking what may happen, nothing is done. That is called gambling. While in stock market, we analyze a company's growth aspect and invest in the same. While in technical analysis, which I'm going to teach you, we analyze each and every candle that is forming. You must know about why those candles are forming, and that is what I'm analyzing. If stock market was gambling, I wouldn't have been teaching you right now about this thing. Okay, it requires a lot of knowledge to invest in the stock market. So again, I will prove this statement wrong because you just need to know the mathematics of elementary level. That's it. Addition, subtraction, that's it, and that will make you money. Even a seventh class boy can earn good money from stock market. How? But just his calculation should be good strong, and and he should be good in analytical skills. Market is not a place to gamble. Unlike noobs, you should invest only at right place. It's a fact that 80% of the billionaires in the world do not have a college degree, and 13 to 14 billionaires are from financial background out of them. Okay. Next up, you need to have a huge capital to invest in stock market, and that's again a false statement. There are shares whose worth is 1 lakh rupees, and there are shares whose worth is even as meager as 15 rupees. So you have to pick your horse. You have to pick your share, which is best for you, which best suits your analysis, and you have to invest in that with whatever sum you want. Our mentees who are new to the market, they are even starting with 1,000 rupees. So there is no minimum sum with which you can start in investing in stock market. Okay. Hope these three myths are clear. So I am proceeding forward. How does the price of a particular stock increases or decreases? So there are some factors that play a major role in the means why the stock prices rise or fall. They are like I've written, media, opinion by well investors, natural disasters, and political and social unrest, risk, supply, demand, and lack of abundance of whatever. One of the reason is if buyers overpower sellers, the stock prices falls and rises. That's one thing that you should know. Next up is if any stock has some bad news. See, there are two kind of news that exist in the stock market. There is a bad news and there is a good news. A good news pushes the price of any share upwards, while a bad news pushes the price downwards. The most recent is what I can give you example of the last year's crash, in which market actually fell down almost 50%. And what was the reason? There was a bad news circulated in the market that actually not circulated in the market. It was the bad news that actually was laid down by the Prime Minister of India that the whole nation is under lockdown and nothing will be operating as efficiently as it was being efficiently means it was being operated earlier. So what happened? It was a big negative news, and all of a sudden, market crashed. And this is how market reacted to a bad news. The price fell down. While if I give you example of a good signal, so recently market is recovering so much, so badly, means so fiercely the market has been recovering. Why? Reason, good news. We have a vaccine to the coronavirus disease. That's a good news. So people are happy and people are just means they are buying and buying and the index is flying. You can take even your example. If you get good marks, if you get good marks, your parents will be happy. That's a good news. And if you get bad marks, then your parents won't be happy, and that's a bad news. That's it. Let's take another example. Reliance Industries. Recently, we heard about big companies like Amazon. Don't do it, Piyush. Okay. Recently, we heard about big companies like Amazon, Facebook, Google invested in Reliance. That has became its stakeholder. A good news. The price of Reliance share is flying currently, and as of now, it's actually on a decline. Okay, that's it. The increase or decrease in price of a stock is clearly dependent on DSP. But who is DSP, or what is DSP? I'll let you know. So DSP stands for demand, supply, and price. The people who are from commerce background, they must be knowing these three terms very clearly. Increase or decrease in shares price is all dependent on DSP. Now let's understand the funda behind it. high demand, low supply, high price, low demand, high supply, low price. When the price of stock is high, its price will also be high. But when a price of any stock will be low, the demand is high and the price is also high. While if the demand is low, the supply is also low. The price is also low, and price always acts vice versa to demand. Oh, sorry. Okay. Now I'll give you a very good example for it. Like last year before this COVID strike, I used to buy Dettol sanitizers at rupees 30 per bottle, if I remember it quite nicely. It was costing me rupees 30 per bottle. And that same pack was being sold at rupees 50 when the demand of the sanitizers rose all of a sudden. Reason because there was no other substitute else than Lifebuoy. Only Lifebuoy and Dettol were the two key sanitizer manufacturers in India, and the demand rose so swiftly that they were charging higher prices because the supply wasn't more and the demand was so high. And what happened after 2 or 3 months, that same sanitizer which they were selling at 50, now they were now selling that at 30 rupees once again. Reason because so many competitors entered the market at that point of time. So many competitors entered the market at that point of time, and what happened is the demand of the sanitizer in the market now became diversified. People you went to for purchasing different brand sanitizers, VLCC and blah blah blah, whatever brands they were to manufacturing sanitizers at lesser cost than Dettol. So what they did is they lowered their price, and because why they lowered their price? Because the demand had decreased, and that's what is playing a major role in market. The price will go high only when the demand for that stock will go high, and when the demand for the stock will fall, the price will automatically come down. Hope everything is clear till here. Anything? Am I going too fast? If you want to pull the brakes, just say me. Am I going too fast, guys? I hope I'm not. Anyone wants to speak out anything? Don't unmute yourself. Just is everything clear till here, till this point? Okay, fine. Try to be a bit interactive because that is what gonna let me move forward. Okay. I need some more interaction from other people as well. Okay, fine. Moving ahead. In how many ways one can earn from stock market? So always remember, money cannot grow overnight. In simple words, I am going to Raju Bhai, the dialogue of Raju Bhai. 21 दिन में पैसा डबल नहीं होगा. Okay, just make it clear. 21 दिन में पैसा डबल नहीं होगा. Market offers the following ways of transaction. That is long-term trading, short-term trading, future trading, intraday trading. In long-term trading, you buy and hold a stock for more than 3 years. Basically, you marry with that stock. Okay, you marry with the stock and enjoy everything of it. The dividend, the bonus shares, the hiking of price, whatever it is giving you. That is called long-term trading. And now, short-term trading is like a affair. What is a affair? In a affair, you get into an affair 3 months to 3 years it will last for at max, and you enjoy some bits of its dividend, you take some bit of its profits and bonus shares and then dump it with everything. I'm sorry if I'm going too vulgar, just say me if I'm too going too vulgar. Okay. So that is short-term trading. Next up is future trading, and future trading is for 1 month. Future is basically a contract which has an expiry date. Okay. Every future contract expires on the last Thursday of a month. Thursday is called the expiry day and on that day a future contract expires. A future contract is valid for only 1 month and you cannot carry forward that future for the next month. Okay. Next up, intraday trading. So, what is intraday trading? If you break the words, you will find out intraday, within a day. Intraday trading is a form of trading in which you have to square off your deals within 3:20 p.m. Otherwise, the shares will take the closing prices. Okay, you have to square off your deals in the on the same day, um, before 3:20 p.m. Otherwise, the shares will take the closing price. So, intraday trading, what does it offers you? Intraday trading offers you leverage. I will talk about that later. Okay, and it can be done from 9:15 to 3:20 only. That's it for intraday. Moving ahead, one thing is missing out here, that is positional trading, and that is you buy and hold shares for 2 weeks to 4 weeks, and you take back the profit and dump that share. Next up, what is short selling? So basic human mentality is buy low, sell high, but stock market has much more to offer. Stock market allows you even to sell high and buy low. You can first sell and then buy from stock market. Swing and positional में क्या difference है sir? Okay. So there is one big difference, not much difference in swing and positional. Swing is you take and hold stock for 2 weeks, and positional is 1 month. That's it, as per me. Okay. So basic, I said means stock market has much more to offer. You can buy low and sell high is the basic human mentality, but stock market allows you to sell high and buy low. First you will sell and then you will buy back, and that is called short selling. Basically you are betting that that stock's price is going to fall. So first you will sell this point, sell at a higher point, and then buy back that particular stock at a lower price. Suppose I give you a situation. Suppose I am a very good friend of yours. Okay, I am a very good friend of yours, and you said, "What? Can I borrow your headphones?" I said, "Okay, take it, but make sure you return it to me by the eve." Okay, you said, "Okay, I'll return it by the eve." That headphone cost was rupees 2000. You took it to the open market and sold it for rupees 2000 now. So you have cash 2000 in your hand. Okay, you sold my headphone for 2000 rupees, and you have 2000 rupees in your hand at that point of time. After few time, few hours or few moments, you find that that particular headphone is now available at 1900 rupees. Okay. So again, you will go to that shop and say, okay, I heard that this is available at 1900 rupees. Just give it to me. So you will buy that back by giving 1900 rupees. Just focus on this thing. You sold it and you had rupees 2000 in your hand, and now you bought it back, and you have now you have given 1900 rupees. Now you still have 100 rupees in your hand. That 100 rupees is your profit. Now you will come and return me my headphone, and you will say, Gaurav, take your headphone. And I don't know what happened with my headphone, nothing. But yeah, in the midst of this procession, you have earned rupees 100, and that is called short selling. Short sellers are betting that the stock they sell will drop in price. Any doubt in short selling? Anyone? Sir, one more example. Okay, I'll give you one more example. Okay, I'll give one more example. I'll give you. Suppose a stock is trading at this point, that is 400 rupees, and you think that the stock might drop 3 might drop to 395 rupees. You think that the stock will decrease to 395 rupees. So what you will do out here is you will first sell. Suppose you sold 10 shares. So your position will be minus 10. Even before buying, you have sold 10 shares. Okay. So you think your analysis speaks that the stock's price is going to drop. You have sold out here 10 shares and you have used 4,000 rupees. Okay. And you have bought back these shares. You have bought back these shares at rupees 395. That is 3950. The difference is your profit. Even before buying those shares, you have sold them first because your analysis was speaking that that share's price might fall in value. Okay. Is it clear to everyone now? Is it clear to everyone? You can do that using the MIS order type. Means, yeah, stock market. Basically, you are doing that original thing only. You are buying low and selling high. But you are changing the procedure. Actually, you are buying low and selling high. You have bought low and selling high. Just but you have just altered the procedure. The process is same. You can just first short sell the stock according to your analysis. You have two options while you click on the any stock. You have two options: buy, sell. When you but it doesn't mean that you have to buy and then only sell. You can first sell and then after that you can buy. That is what is short selling concept. Fine. Okay, fine. Moving forward, here is the example that I gave you just now. An investor believes that stock A, which is trading at rupees 100 per share, will decline when the company announces its annual earnings in 1 week. Therefore, the investor borrows 100 shares from a broker. He hasn't bought it, he borrows while short selling those shares to the market. He borrows. That broker is his friend. He short sells those shares into the market at rupees 100 shares of stock A. Okay. A week later, stock A's price fall to rupees 90 per share after the company announces annual earnings. The investor decides to close the position, so he buy back the shares of stock A from the open market at price of 90. The difference will be his profits. Short selling is only done in intraday or futures. You cannot take positional trades with short positions or swing trades. Short selling requires short selling requires the margin to be traded. Okay, so you can trade short means you can short a stock in intraday or in futures only. Moving forward, so what is intraday trading? Intraday, as I said, within the day. Intraday trading refers to buying and selling of equities of stocks during the trading hours of a given day. You get leverage only in intraday trading. Intraday trading cannot be carried forward to the next day. If you do not exit before the closure of the market, the shares will take the closing price of the day. Sir, you just said that stock will be falling after a week in the example. Yes. So that was in futures. The example that I gave was for futures, not for intraday. Okay. I said uh, short selling can be done in futures as well as uh, intraday. Okay. Next up, so here we come to one main thing, and that is the leverage concept. And why is leverage called a two-sided sword? So let's find out the answer. In stock market, stock leverage trading is borrowing shares from brokers and blah blah and blah stuff that is of no use. Leverage trading is, suppose your broker is giving you 10x leverage. Suppose your broker is giving you 10x leverage. So this x is representing your capital. Suppose your capital is of rupees 1000, with 10x leverage, your capital becomes rupees 10,000. You can trade with 10,000 rupees for intraday. Only in intraday you can trade with this amount. Okay, fine. First, just tell me if you got to know the basic idea of leverage. Okay, fine. So now let me tell you why is leverage called a two-sided sword. Okay, um, just hold on. So I said quite clearly that if your broker is giving you 10x leverage, this x is representing your capital. Suppose your capital is rupees 1000, your original capital. Okay, focus on this thing now. With 10x leverage, this rupees 10,000 is your leveraged capital. Okay, fine. This is the amount with which you can trade in intraday, not in any other segment. Okay, suppose you are making 1% profit on your leveraged capital. I'm writing it LC, leveraged capital. So 1% of 10,000 is equal to rupees 100. Okay, and rupees 100 is equal to 10% of your actual capital. Rupees 100 is equal to 10% of your actual capital. So with leverage, what you can actually do is you can multiply your profits. This is where leverage helps you. Leverage can help you multiply your profits. But a sword always have two sides. Okay. Suppose if you are making 1% loss on your leveraged capital, and that is the same amount of rupees 100. Okay, this 100 is equivalent to 10% of your capital. Now just think about this thing, that if you're losing 10% of your capital in a single day, so in next 10 days you will be out of the market if you are consistently losing. Okay, so this is where leverage is a very bad thing. Otherwise, at this point, leverage is the best thing. But this is what nobody will want. So I will always advise you to use leverage wisely. Until and unless you are totally sure of your trade, never use huge amount of leverage.
Instead of 10x leverage, you can use 5x leverage also. Okay. So if you are not that much sure, if you are not totally sure about your trade, don't use this full amount of leverage. Okay. Use this amount. Yes, you will get lesser profits, but your risk will also be less out there. Okay. Fine. Okay then. How can we decide to choose the leverage, sir? MIS order type allows you to use leverage. The order type is MIS that allows you to use leverage. Okay. Now think about a person who is losing 10% in a single day. He will be out of the market for in the next 10 days if he continues his losing streak. But also think about people, a smart trader who is risking not more than 2 to 3% of his capital in a single day. So why he is doing so? Because he wants to sustain in the market. Nobody can be wrong for a continuous 1 month. Yes, CO as well, cover order. Okay, if a person who is using means risking 2% of his capital in a single day, he has still got 50 days remaining to stay in the market and get out of the market. And for a continuous 50 trades, nobody can be wrong. But suppose, sir, we buy one share of Reliance at suppose 2000, then MI, it will approximately show rupees 2000 per share, 10x leverages. Yes, yes, sir, of course. If you use MIS order type, every share has different amount of leverage offered. Reliance might have a 7x leverage, other shares might have 5x leverage, 7x leverage, 10x leverage, 14x leverage. This is stock leverage varies from stock to stock. Okay.
Is the concept clear to everybody? How we know which share how much leverage? Um, it is given on Zerodha's website or other means it is shown in platform. Yeah, yeah. Which broker is giving how much leverage in which share? So that is available in that its own website portal only. Okay. Okay, fine. So now, why do brokers give leverage? Generally, people don't possess enough funds to buy their desired quantities of securities. So, brokering firms provide funds in order to fulfill their client needs. And as I explained you the situation, 2x leverage, 10,000 capital becomes 20,000 rupees. And known brokerage houses like Zerodha and Upstocks provide 10x leverage on your funds. And that's it for today. This is where we're going to stop, and this is where I'm going to end the recording. I will share you one more link in which I will take all the queries, whatever you want to speak about. And yes, the session is ending in a minute. This link is expiring in a minute. I'll share you one more link. Okay. Thank you everyone for joining in. Goodbye.